Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about AirBNB stock. This is one of the stocks that we covered earlier over the summer when they were trading at $134 a share, and they rocketed higher based on some serious growth, solid Q3 earnings, as well as continued vaccinations, making everyone feel a lot more comfortable with travel. However, over the course of the past week, starting with overall weakness in the market, immediately followed by the resurgence of a COVID variant, leading to potential lockdowns or some travel restrictions, and the threat of future lockdowns and travel restrictions have continued to push AirBNB stock lower. And you can see some of that here on the right hand side. If we want to look at that from a overall charting perspective, you can see the 6-month chart right here. I'll showcase the 3-month chart just to showcase the sheer drop up from north of $210 a share down to below $170 a share, which we haven't seen since the prior earnings on November 4th. One of the reasons why I think now is a good time to start buying in is because I don't believe that we're going to see the COVID potential lockdowns associated with this have the same impact that we saw earlier this year. I think that this may be another Delta variant type of scare, at which point this is potentially a good time to begin loading up. And I want to emphasize the begin. As you can see on the 6-month chart again, the last time they had earnings prior to Q3, the Q2 earnings for August 12, 2020, the stock was around $150 a share, just below that. So the stock could head back down. You can see that it kind of traded in that range. What I'm going to be looking for is to begin buying in this coming week. And if it continues to go lower, continue to buy in onto those positions, because I believe that this is a stock that is going to continue to pound higher in the future. Some of the concerns that I do have are some of their valuation. As you can see right here, if we look at trailing 12 months, the price to sales is currently nearly 20.5, which is nearly double the industry. However, the growth potentially compensates for that. They currently do not have a positive price to earnings ratio because they're not going to have any earnings, or they're not going to be net positive. Although over the course of the last quarter, they did post a positive profit on the quarter. So it'll be nice to see if they can continue to do that, because they do have the capability to grow. However, they had a lot of expenses to deal with, primarily in 2020, and they're funding that growth. That growth is pretty phenomenal. You can see that revenue growth quarter over quarter is significantly higher, and that revenue growth, as you can anticipate, is growing higher as well. So what are some of the things that are strong proponents and capabilities associated with this stock? The first thing that I want to highlight is, as you can see, I'll pull up the quarterly view, that the cash and cash equivalents, or I'll even say short-term investments, they can basically, as of Q3, draw on about $8 billion to fund growth, to cover expenses, to cover debts. And as such, I think they're in a really strong position. Because of that, I want to continue to highlight that should any changes occur that would negatively reflect the capabilities to grow going forward, they have a cash pile. They should not need to raise additional capital by way of share dilution or other potential events. The other thing that, as we look at the income statement here, that they are growing incredibly rapidly, and Q3 is traditionally their largest quarter. Most of that is going to be driven by the business case of people traveling over the summer, but as I'm sure you can expect, Q4 should not be bad. So they had very strong revenue, and they actually posted down here below the net income. They actually had a very profitable quarter with $834 million of profit, which is significantly better than what we were seeing last year during some of those same time periods. So those are but a few of the fundamental analysis components of why I really like the potential of the stock right now. Now I want to go to their Q3 earnings report, point to why I think that AirBNB is going to continue to grow. So this is the AirBNB Q3 shareholder letter. So all this is available. Just Google ABNB, investor relations, and you can see all of this. What I would highlight is, again, they are continuing to have significant numbers of nights and experiences books, and we are seeing large revenue associated with that. The main things that I want to highlight, and this is pertinent, we just saw that the United States cut off travel to some South or Southern African countries, including South Africa, and we saw some of that in Europe as well. However, the bulk of bookings is in North America, immediately followed by Europe. That's this EMEA is primarily going to be Europe, and you saw growth was accelerating rapidly. You're going to continue to see growth in Latin America and Asia, but primarily you're going to see North America and Europe drive not only overall growth in terms of the straight top-down revenue to bottom line, but overall profitability as well. The other things that I would highlight, and we can talk about this, is everything is continuing to power higher. You can see the growth 67% year over year, income 280% year over year, overall just continuing to pound higher. But I'm going to go down here to the forecasting and what the expectations are going forward. Keep in mind this was made as of the Q3 earnings call in the beginning week of November. The main thing I want to highlight here is as of the end of September, the backlog for nights booked over Thanksgiving week was 40% higher than the same time in 2019. So they're expecting very strong travel demand over the course of this time period. The other thing I would highlight is Q4 is normally going to be lighter than Q3, but this is one that should do very, very well and should hopefully continue to be profitable. They're expecting that Q4 revenue to be between 1.39 and 1.48 billion, and have seen no reason why that may not be the case at this point in time. And they're also expecting this to be additional profitability. So they're going to look to reduce costs and continue to see that power higher. With a closing price on Friday of around $170 a share, I would expect this to be a good time to enter a position as they will continue to grow going forward. However, the valuation concerns as a company that is trading around $110 billion in valuation will mean that this will continue to be a volatile investment, and that should be something to watch because we have to make sure that we're focusing on the fact that should the future interest rate environment change, some of these high flyers will be negatively impacted by that. That being said, I see a lot of potential with LEAPS contracts from an options perspective, as well as buying the shares and selling covered calls. There's a lot to like about AirBNB, and it's one that I'm going to continue to build a position in going forward. If you find this content helpful, please leave a like and subscribe, as it really helps the channel to grow and encourages me to make additional content. As well as that information, I'd like to highlight that I am not a financial advisor by any means. I'm just some guy on YouTube. So if you find this content helpful, let me know. Thanks. Talk to you later.